everyone, welcome back to Mindful Investing. In today's video, I'm going to talk about two stocks that are starting to move higher, showing some early signs of reversal after weeks of consolidation. Both of these stocks have been on my watch list for quite some time, and in fact, I've added one of them to my own portfolio just recently and planning to build a long-term position. We'll talk about their fundamentals, technical setups, my model projections, and how I plan to manage these positions going forward. So let's get right into it. Let's start with the first one, which is MercadoLibre, ticker symbol MELI. This is a stock I've been watching for months. I actually covered MELI back in March when it was trading around $2,095. At that time, my 1 year price target was around $2,880 and my 5 year price target was roughly $10,000. After that video, the stock saw a sharp pullback in April due to tariff concerns. It went all the way down to 1700s and then bounced back to around $2,640. Since then, it's been consolidating in a pretty tight range. Now, what's interesting is the technical setup we are seeing right now. If you look at the daily chart, MELI is bouncing right off the 200-day EMA, which has acted as a strong support level several times in the past. And on the weekly chart, it's bouncing from the 50-day EMA, another major support zone that has historically signaled strong reversals. So from a technical standpoint, MELI looks like it's setting up for another potential leg higher. Now, I want to share how I'm personally playing this one. I finally opened a position in MELI at $2,179. Since this is a high priced stock, I like to invest in dollar amounts rather than share counts. So I started with about $1,000 as my initial position, and this allowed me to scale in gradually over time without overexposing myself at a single price point. My plan is to add more if it dips into the $1,900 range, and if somehow we see a deeper correction, I'll buy more near $1,750, which I see as the next major support level. Now, let me also show you their fundamentals. MercadoLibre currently has a market cap of around $115 billion and their financials look pretty solid. They have a total cash on hand of about $7 billion with total debt of around $8.97 billion and a free cash flow of roughly $7.3 billion. So the company has a healthy balance sheet, strong cash generation and manageable debt, especially for a high growth e-commerce and fintech company. Their revenue growth remains impressive too, driven by their expanding fintech arm Mercado Pago and logistics platform Mercado Envios. And according to my evaluation model, MELI shows a potential 35% upside in 1 year and a massive 343% upside over the next 5 years. That's a phenomenal growth outlook for a company that's already profitable and still expanding in Latin America. For me, this is a long-term compounder. It has the right business model, strong fundamentals, and it's positioned in one of the fastest growing markets in the world. I'm not looking for quick gains here. I'm slowly building a position that I believe will create substantial value over time. Now, let's move on to the second stock, which is S&P Global, ticker symbol SPGI. This is another name that's been on my watch list for a while, and it's starting to look attractive again after a few months of weakness. Recently, S&P Global and other financial companies pulled back following FactSet's earnings, but now we are seeing this stock try to bounce back from its short-term oversold levels. Technically, S&P Global is sitting around key support levels, and if it can hold above $480, I believe it could easily make a move toward $525, which is right around its 200-day EMA. That's my first price target for a short to medium-term swing trade. Now, let's also look at their fundamentals. S&P Global is a massive company with a market cap of over $148 billion. It's one of the cornerstones of global financial infrastructure, and they are behind the S&P 500 index, credit ratings, market intelligence, and commodity analytics. Financially, they are very stable, though not as aggressive on the growth side as some tech names, but they have a total cash on hand of $1.8 billion with total debt of $11.9 billion and a free cash flow of $5.4 billion. My valuation model projects a modest 11% upside in 1 year and around 68% upside in 5 years. So it's not a massive growth stock, but it's a steady compounder and great for conservative investors who prefer lower volatility and consistent performance. Now, this is not a stock I plan to hold for the long term. It's more of a technical setup for me. I look to enter around $480, add on weakness if it dips slightly lower, and look to exit between $525 to $530, locking in those gains. The key reason I like S&P Global as a swing trade is because it tends to move less violently than the tech industry. And even if the market corrects, this one usually holds up better due to its strong cash flows and stable revenue streams. So to summarize, MercadoLibre have opened a long-term position with strong fundamentals, great chart setup, and a massive upside potential. And S&P Global, it's a solid swing trade setup, reliable company, good short-term technical play, but not something I'm holding for years. Both these stocks are turning green after periods of weakness, and I think they are worth watching closely in the coming weeks. As always, I'd love to hear from you. Do you hold any of these stocks in your portfolio? If so, what's your average price and what are your targets? Drop your thoughts in the comments below. And if you found this video helpful, don't forget to hit like, subscribe to the channel, and hit the bell icon. It really helps the channel grow and keeps the content coming your way. That's all for this video. Thanks for watching, and I'll see you in the next one.